Thanks for joining me again for another market update. So this week oil has climbed marginally whilst gas and electricity contracts have eased. So let's have a look at what's been happening during the week in some more detail. Oil prices traded within a relatively tight range on Monday, with bullish and bearish factors competing to gain direction. At the close, the bulls took charge and front-month Brent settled around $0.3 per barrel higher day on day. Brent continued to trade in a tight range on Tuesday as market participants await news on a deal between the US and China. OPEC are also due to meet in December, where further production cuts will be discussed. As a result, markets remained cautious and rose by $0.2 per barrel. Wednesday saw nearly all of Tuesday's gains reversed, as the weekly EIA report showed an increase in US commercial crude inventories of 1.6 million barrels compared to the previous week. Then prices continued to ease throughout Thursday's session as market participants continue to digest the inventory report details. Last night, despite prices easing later in the week, front-month Brent closed at $63.5 per barrel. That's up $0.2 per barrel compared to last week. As gas temperatures fell, demand for gas increased, which moved the system from a long position to a short position by Monday morning. Prompt prices rose as a result of the tight system. However, longer dated contracts traded sideways. Temperature forecasts were revised higher for the coming days, although the healthy outlook for supply meant that all contracts eased throughout Tuesday's session. Reduced wind generation led to an increase in gas demand on Wednesday, and this pressured prompt prices higher. Longer dated contracts took their direction from rising carbon. All contracts then fell on Thursday, with most near-term contracts losing around a penny a therm. Healthy supply dynamics, increased renewable generation and warmer weather being forecast all contributed to the losses. Last night, all contracts closed lower than last Friday. December 19 fell 1.65 pence per therm, whilst winter 20 lost 1.5 pence per therm. Curve power contracts closed lower on Monday, taking their direction from weaker coal and carbon prices. Prices continued to ease throughout Tuesday's session, thanks once again to lower gas, as well as increased forecasts of wind generation. Renewable feed-in reduced on Wednesday to 1.45 gigawatts below the seasonal norm, and prompt contracts edged higher as a result. All contracts then eased on Thursday, in line with their gas counterparts, and last night curve contracts out to summer 21 closed lower than last Friday. Summer 20 lost £0.9 per megawatt hour, and summer 21 lost 0.35. However, winter 21 gained £0.2 per megawatt hour. You can download the full version of this report from our website. Thanks for watching, and we'll see you next week.